Okay, I'm Brian Watkins. This is homework number 4 for the QuickBooks module in Accounting 231 for fall of 2012. And folks, if you can do this one, you are ready for the test. There's only one more skill we need to learn, and that's how to reconcile the checking account. So I wouldn't run right to the testing center, but we're getting there. And this will allow me to go light near the end of the semester because you'll have harder Excel spreadsheets to learn, and you'll be done with QuickBooks. So let's get started. I'm going to go and start my new company now. So I'll put it on pause until I have the company file ready to go. Okay, you're going to use your full name. I'm tired of using my full name, but you will use your full name so that I can grade you. I'll just call it JBW Fishing Fishing Co. And we're gonna provide complete fishing kits for tourists, so they can fly in, pick up everything they need, and they don't have to bring any equipment with them. And we can have a fishing guide. We can do all kinds of stuff. So that's my business idea for today. It's going to be an online business, so we'll call it Online and Retail. And it's going to be a sole proprietorship to keep it easy. So we'll create the file. I'll pause here. Okay, we're going to have standard preferences. We're going to use items and inventory, so we'll use purchase orders. We're going to make sure we charge a sales tax. So we will charge sales tax and create a sales tax item called sales tax for 10% to a state tax authority. All right. And I'll keep the beep on so that you can hear what it's like, and it'll remind you to turn it off in the testing center. Now, a word. This is the third video I've done on this, because I've tried to go too fast and I've made the kind of dumb errors I'm trying to train you guys not to make. So take your homework, take a pen, and for each transaction, very carefully edit and review what you do so that you don't get to the end of all these transactions and find out that you screwed up dates. I just finished about a half-hour video and I made an error right at the very end. Painful. And I tried to undo it, but it got so messy and complicated that I'm just going to start over. Okay, so first thing we do is put money in the bank. Bank of Laie. And we're going to check our date very carefully and find that we start this project on February 1st, 2013. We're going to get some money from our own pocket to be owner's equity in this new venture. And there's nothing new about this entry. You've made it every time we start. $25,000. Save and close. We know. Good. Alright, so now we're going to create 4 purchase orders in succession. These purchase orders are all on the 2nd of February, and the first one is to a company called Daiwa Corporation. The opening balance is irrelevant, so we'll ignore that. Daiwa manufactures something called, it's going to be a fishing reel, but they call it a Saltigo saltwater reel. And it's apparently pretty hot stuff. Okay, and we're going to pay $300 a piece for them. If we sell them to anybody, it's going to cost $600. Okay, and we're going to buy 10. We'll ignore all that. Ignore. We're going to buy 10 of these things, and these are the fishing reel purchase. So we're going to check very carefully. Create purchase order 1 to Daiwa Corp for 10 Saltigo reels at a price of $300 each on the 2nd of February. Good. and I'm going to ignore everything in the spelling. So purchase order number 2. Our second vendor is Tackle Direct. We'll hit OK, and we're going to buy 10 Penn Power surf rods. So fishing pole, but it's a Penn Power surf rod. Penn Power surf. Okay, apparently these are the best you can get, and they cost $50. I would think people would pay more. Okay, so it costs $50. If we sell them, sell for 100, and good to go. Oh, I need my merchandise sale, and we're going to buy 10 of the rods and combine them with our, I'll call it fishing poles, because I'm not a fisher person, and that works for me. Okay, so we've got our reels and our rods, and now we need some fishing line. The fishing line comes from a company called Moi Moi, and they make fancy fishing line. I'm going to call it fishing line. They call it monofilament something or other, but I'm going to call it fishing line. And it costs $10. I don't think we'd ever sell the stuff, but if we did, we'd charge $25 for it. Okay, and we'll need at least one for each of the 10 reels we're going to do. So this is the fishing line. 2, 2, 10, good. Finally, we're going to buy a whole bunch of stuff all at once from Diamond Fishing Supply. We'll call it tackle boxes and tackle and everything you need. So I'm just gonna call this a fishing kit, and this fishing kit will contain a bunch of things that we buy separately, but since we buy them all from the same vendor, it comes to roughly $100 per package. We would charge $300 if we sold it to anybody, but essentially we're going to order all at once so that we can put together 10 complete fishing packages. So we'll get 10 of these. We'll call them fishing kits. Okay, so 2, save and close. Alright, so now we have 4 purchase orders in there, and that's a lot of purchase orders. So I'm going to show you here, purchases, open purchase order detail. Alright, so now we can look and we can see fishing kit, line, pole, reel, 10, 10, 10, 10, 1,000. I'm going down my list here. So we had 1,000 for the fishing kit. Okay, 100 for the fishing line, 500 for the rods, and 3,000 for those reels. Good. Looks like we've got our purchase orders done correctly. And so now we're going to jump forward to February 5th when we write a check to a company called Gary's Web Design. Okay, we're not writing our own website, we're going to have Gary do it. $1,500 he's going to charge to design, website, and host for 1 year. So he's our computer guru. We'll need a new expense account, and we will call it website design and maintenance. I don't think it'll let me spell it out. See it, maintenance. Oh, it does. Okay, so there's our account and Gary's Web Design, and this is for website design and 1 year of hosting. Great. And the date on this is going to be the 5th. So let's double check. Right, check number 1 for $1,500. Yes, representing payment for February 5th. Good. Now we got a website. Okay. We're going to receive inventory with a bill. It's going to be the 12th of February. We're going to get our inventory from Daiwa. Yes, we'll get the purchase order. Okay, so what do we see? Daiwa has terms of 2.510 net 30. Okay, these are interesting terms. They're not on our standard list, so we need to add new. And it's 2.5 10 net 30. That means that the bill is due in 30 days. The discount percentage is 2.5%, and the discount is if you pay within 10 days. Okay, those are the terms. These are the fishing reels. The total, oh, there's additional shipping of $400. So we're just going to pop that right in our account. So $3,400, recalculate. So fishing reels plus shipping, $3,400 on the 12th. Save and close. I'm marking off my box. Now I'm going to see that on February 13th, we get another shipment in from Moi Moi, which we receive. Has 10 rolls of fishing line and a bill for $120. Okay, there's a little extra shipping there, so $120. And the terms for Moi Moi aren't given, so I'll just say it's due on receipt. This is the fishing line. 120, 213, Moi Moi. No terms. February 13th. Good. Save and close. Alright. February 15th. We receive from Tackle Direct. Here's the purchase order we'll receive against it. And it arrives with a bill of $450 and a note that they were only able to ship us 9. So we ordered 10, but they only gave us 9. It's due on receipt, and it's 9 poles. Okay? So they're short one. So if I recalculate, I've got 9 poles, $450 on the 15th, Tackle Direct. Now that's going to put a block on our plans, so we're going to have to do something. So we'll turn the page. February 16th, Diamond Fishing Supply stuff. Okay, that's Saturday, so they brought us our fishing kits. Okay, these were the fishing kits. And Diamond, oh, they have 320 net 45. 320 net 45. So the net is due in 45 days. But if we pay early, we get a pretty good discount. 3%, it's a lot. If paid within 20 days. And that's pretty generous. So it'll mark, if we pay by 3/8, we get a discount on this one. And we have a bill of $1,050. A little bit of shipping there. Recalculate. Save and close. 216, Diamond, 320 net 45. Alright. Well, that's a busy Saturday. When you're self-employed, Saturday's a work day. So the next thing we do on February 16th, we drive to Aiea and purchase a single Penn Power surf rod at Roy's Fishing Supply. Okay. So on the 16th, we go to Roy's Fishing Supply over in town. And we pick up one more Penn rod to make up for short shipment. Because we need 10 rods, right? Well, this is going to be an inventory adjustment. So we're going to go and do our other expense. This is just that temporary account that we're going to use when we have inventory issues to clean up. And we're going to write a check for 110 because we have to buy this fishing pole. Buy pole retail to cover short shipment. So it costs 110, but the benefit is we don't have to wait for a new shipment. We can get started right away. Sometimes time is worth more. Okay, $10 represents sales tax you paid. Doesn't matter what the 10 bucks was for. Whatever we pay has to be dropped into inventory. So now we're going to adjust not only the quantity, we're going to go from 9 to 10, but we're going to have to add extra value. So we have the inventory adjustment for the rods, fishing poles we call them. So the new quantity is 10, and the new value, let's see, we had 450, and so now we have another one for 110, so that gives us $560. Okay, remember, we had 9 at $50 from our original supplier. That was $450 total. We had to go to the store and buy an extra one because they shorted us one on our order. So we add 110 for this new one to the 450 we had for the old shipment. Now we have 10 on hand for a value of 560. Okay, save and close. Alright, so now we should have all 10 rods. Okay, let's go and check. Inventory, valuation detail. And refresh. Okay, 10 fishing kits, 10 fishing line, 10 fishing poles. There it is. Came in. 10 fishing reels. 3,400. Let's go back over the 3,400 with the shipping. 560 with that extra pole. 120 with that $20 shipping charge and the $50 shipping charge. So this 5,130 looks to be the accurate amount of our inventory. Okay? And before we do anything more with inventory to make sure we don't make a mistake, we're going to look at our balance sheet, and we're going to make sure that we cleared out any inventory adjustment, which we did. It's 0. Good. So now we're ready for the next step, which is we're going to write a check to a gentleman called Aaron Kalama, who is our fisherman expert. Okay, and he is going to build us assemble our equipment. So it's an inventory adjustment, and we're going to pay him $250. He is our consultant. So cost of assembling fishing equipment, and he's told us what to buy and is going to put it together for us. Alright, it's going to be an inventory adjustment. And it's going to be on the 16th. It's on that Saturday. Good. Alright, so now, before we do the build, we go to inventory, build assemblies, but we have to define the assembly. So we're going to add a new assembly. This is going to be called a complete fishing package. Okay, this is what we've been trying to put together. Complete fishing package. It has everything you need to get off the plane, meet your fishing guide, and go fishing. We're going to sell them for $999. Okay, and we're going to have one fishing kit, one thing of fishing line, one of those super expensive reels, and one of our fancy surf rods. And if we had more, we could just it'll keep adding lines. So it looks like our bill of materials is around $460. These are the raw costs, not with the shipping. It'll add that later for us. And we're going to go to sales, so we're good to go. And we're going to build the complete packages. And we're going to build 10 of them. Build and close on the 16th. Yes. Don't forget now that we have that $250 that we need to adjust. This time we're just adjusting the value, and we're going to put it in our complete fishing package, and we're going to add $250 to the 5,130. So we're going to have $5,280, okay, to add assembly costs. And we couldn't add it before because we didn't really want to put it on any of our items, because if we sell the items separately, it wouldn't make sense to put the extra cost on the items. So we're going to put them in the fishing package, close, and now if we look at our inventory, we are ready to go. Valuation detail, we're ready to sell. We have 0 kits, 0 line, 0 poles, 0 reels, but we have 10 complete fishing packages, and we built the assembly, and we added, from 130 we added 250. So we got, how did I get 280 there? Value difference, no, the value difference was 250. Save and close. Yes. Yes. Refresh. There we go. That's why you run this report. That would have been it would have been too difficult to undo that one. We would have had to do a lot of work. So now it looks like the 130 plus the 250 is 5,380, and we're good to go. The last thing we want to check is to make sure that we cleaned out everything in our inventory adjustment. Otherwise, we'd have to, oh, come on. Let's go to April. Inventory adjustment is 0. Good. So we're ready to go and sell. On February 20th, we receive a deposit that goes to our bank account via our website. Okay, now, QuickBooks has a way to set that up automatically, but we don't have that. We're not going to pay Intuit's fees for that, okay? So we're going to have to do it manually. So first thing we do is create a sales receipt. Okay, our customer, John White, on the 20th of February, bought a complete fishing package, one of them. Thank you. And at this point, we realize, oh, the guy's not here in Oahu, he's in Seattle. Well, we want to sell it to him, so we're going to suck it up, and we're going to pay that extra $125. So let's get the cash in. Thank you for the cash. Let's deposit the cash. Cash is in the bank account. Everything's good. Save and close. But now we've got to send it to him. So we're going to have a FedEx bill. And FedEx is going to be a shipping expense. I don't see it. Continue. Okay, where is it? Travel. Postage and delivery works. Okay. Courier and pick up a delivery. Good. And we're going to have to pay $125 to ship that. Okay. And to ship first order. We had no idea that it would cost so much to ship these things. So we're going to be good business people and immediately go to Gary and say, fix our website so that if a customer off-island buys stuff, they pay their own shipping. Gary says, great, $300 for the rush job. Okay. This is what makes good business people successful and poor business people unsuccessful. We jumped on the problem quick. We amended our website. So the next few orders have to pay their own shipping charge. And Gary's happy for some extra money to work on Saturday, so, or whatever day the 20th is. All right, save and close. That's 300 to Gary. All right, so now on the 22nd of February, this is when business is fun. Somebody found out about our business, wrote an article about it, and a local tour guide read the article and wants 5 of our outfits or 5 of our fishing packages so that he can outfit a group of tourists. All right, so we're gonna go to 22nd. We're gonna create a new customer here. Oahu Fishing Tours. Okay, and we're going to give him terms, and the terms we're giving are $215 net 30, because we're going to give him some credit, but we're hoping we're going to get some cash really quick. So if he pays us in 15 days, we'll give him a discount. Buying 5 complete fishing packages. Pleasure working with you. Those are the kind of customers you want to keep happy. So sold 5 to Oahu Fishing Tours. All right, I'm gonna undo the online payment for all invoices because I don't want to pay Intuit Payment Network a fee. All right, the date of this sale is the 22nd. Okay, Oahu Fishing Tours 5. We get our taxes, and it looks like everything is good. All right, so now we're going to come down to the 1st of March. And Oahu Guy is going to bring us $5,384.61. Well, he owes $5,494.50, but there are discounts available. So we click on discounts, and the amount of the discount is indeed $109.89. We click on sales discounts, which is the correct contra revenue account. We hit done, and now the check balances because our customer knew how much they owed. They wrote us a check for the right amount. We're happy to give them the discount because we're going to get on the, let's see, on the 22nd they bought this, and on the 1st, so yeah, they even had a few days left to get their discount. Let's see, the 22nd, and we gave them 15 days. Yep. Save and close. All right, so now we have a deposit from the fishing tour people, which we make on the 1st. Okay. And as a side note, he's going to buy 20 kits from us in the next 2 months. So we would immediately get on the purchase orders, right? But we don't have to do that. So March 1st, we deposit the check, and we're going to pay the outstanding bills. Okay, let's pay our bills. Moi Moi, good. Tackle Direct, good. Daiwa, and Diamond Fishing. Oh, and look at that. We've got $31.50 in a discount. Okay, so we're going to have to go to Inventory Adjustment because according to GAAP, any discount that we obtain just means we paid less for inventory, so we don't keep track of any income. We just put the cost savings through to the inventory. And the way we're going to do that is we're going to make a note. $31.50 has to come out of our inventory because we're going to pay less than that. So we will set the discount. Done. $31.50, so that gives us a check of $4,988. It's the 1st, and the bills are out. And that's a wonderful feeling. I ran my own business, and I can tell you that's a great feeling. So now we're going to go to inventory. We're going to adjust our quantity, or not our quantity, sorry, our value. And it's going to be the complete fishing package. Okay, and we've already sold some. It's already gone out the door. But now we know that we have $31.50 less. So we take our $21.52, and we subtract $31.50, and that gives us $2,120.50. So our new value is 2120.5 to adjust for a discount obtained when we paid. Let's see, who did we pay that we got the discount from? I think it was Diamond Fishing Supply. Okay, save and close. We don't have to go back and redo anything. But for future inventory, any future inventory that we sell, our inventory valuation has changed to $21.20.50. Now I think that you are quite capable of handling just about any inventory issue that would come your way with QuickBooks. And that is one of the more difficult things to do with QuickBooks. So we're set. Future items, it looks like there will be $530.13 is your costs now. So you're selling these for about $1,000. That's a pretty good profit. Let's go to our company and financial, and let's make sure that we've applied all of our inventory adjustment. Refresh. No inventory adjustment. Good. Our sales discount, $189. Yeah. That was for the fishing tour. Okay. And our cost of goods sold. Good. We can see all of our bills that were paid. Postage and delivery. That was the FedEx. Website design, $1,800. Good. So there's our profit and loss. I'm going to print this, send it to my grader. So there's your number. And now let's look at our balance sheet. Okay. Balance sheet is... We've got inventory left. We should have no undeposited funds. Oh, sales tax payable. We got to pay that sales tax. That will not affect our income. So our income statement was still right, but we pay our sales tax according to our sheet. It says transfer sales tax collected to state tax authority on the 1st. You go to vendors, sales tax, pay sales tax. The date is going to be March 1st. Show sales tax on March 1st. We're really messing with QuickBooks here. It's hard for it to figure out what to do. So we'll adjust, and then we'll cancel the adjustment. So now we see that we have $499.40 that we've collected. We're just going to click that, and it's going to pay it. So now, when we run our balance sheet, we will have the correct balance in our checking account. We will have no liability for sales tax. Our income, again, $731.11, did not change with that little thing, so the income statement is still good. Our inventory, our checking account, and we've got the makings of a great business. So prepare and upload PDFs of your balance sheet and your income statement not later than Thursday, October 18th at noon. Okay, and I'm going to double the points on this homework to reflect the work that you're doing on it. And don't be late. If you have any questions, please give me an email. If you should see any errors, let me know sooner rather than later, because I'm just as prone to making an error as anybody. But I think you can start considering yourselves well trained in QuickBooks. So have a good weekend.